Get your free copy of the complete tutorial at www.teachucomp.com/free.
The profit and loss statement, which is also referred to as an income statement or operating statement, is one of the most important reports in the three key financial statements. It shows the profits and expenses reported for the period. It does not necessarily reflect the cash the company has made or lost during the year. It explains how the equity shown in the balance sheet has changed over a fiscal period, often a fiscal year. This report shows the revenue and expenses for a specific period. The difference between the total revenue and the total expenses is the company's net income. A key element of this statement is that the amounts shown in the statement represent transactions over a period of time, while the items represented in the balance sheet show information as of a specific date. When you combine the information shown in the profit and loss statement with the information shown in the balance sheet at the end of an accounting period, it constitutes a company's financial statement. In addition, you can use this statement as a tool to compare results for the period with trends from past periods. You can also compare the information to budgeted revenue and expenses. This can then help you form a reasonable forecast for the future. This statement can also help you see problem areas in revenue and expenses. When an income statement is prepared properly, the difference between revenue and expense is designated as net income or net loss. This is then added to or removed from the equity shown in your balance sheet. You can find information needed to prepare an income statement from the balances in the general ledger accounts. You need the account titles and their balances for the time specified. For a typical service business, this report has 4 sections: the heading, the revenue section, the expenses section, and the net income or net loss section. In the heading, which typically consists of 3 lines, you will see the name of the business, the name of the statement, and then the period that the statement covers. In the revenue section, the title revenue is listed, followed by the amount of revenue. If you have more than one income account, you should indent each one under the revenue heading by about 1 centimeter and list the amount next to each. Like the revenue section, you also prepare the expenses section by writing the title of expenses and then listing each expense account and its balance in the section below. Finally, in the net income or net loss section, you subtract the total expenses from the total revenue for the period. If this is a positive number, then you write net income on the bottom line of the report and follow it with the positive result. If this is a negative number, then you write the title of net loss on the bottom line, followed by the negative number. The income statement format can change, depending on the type of legal entity for which the report is being generated. For example, an income statement for a corporation may have a few more entries and subtotals for its revenue and expense sections than a sole proprietorship would. However, the general format of the report and the information it contains is the same.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.